Hello, welcome back. So now we do a end of day review for the SPY price action. Basically, this morning we are take a trade, a short trade right here, based on 15-minute time frame level. It didn't work out for us. It go to another level, which is another high time frame. With this one is 1 hour time frame, and then we are our rule we only take one trade a week, but we are take so-called a second trade, just test our idea. It's not a real trade, it's just supposed to be a trade, so it's not a real trade. We don't take a trade, we don't play the order. It just it's like a trial, right? And our entry right here at 10.18. The idea is that it will be the order block, fair value gap retest. Hold on, I don't see is fair value gap retest. Let's check again the screenshot. See, is that what we do? Okay, look at the screenshot we have, right? Oh yeah, we annotate is the fair value gap retest. So the entry should not be 18, then it should be the next upclose candle should be 19. So that's the idea right there, right? Okay. So it's a little bit early, aggressive, early. We should enter this candle 19 or 20. I think the 20 will be the best, right? 20, yeah. Let's put a 20 right here. So 10, 20. Then that will fit our setup. Otherwise, we don't have the setup. And when we don't have the setup, we're not gonna trade. We're not gonna check the trade if the setup is not there. So basically, you have the order block right here. Yep. Right, displacement, and then retest the order block right here. So that's an idea. So the engagement at 10, 20, right? But that's still not, the best entry, not a perfect entry. You know why? Because based on the DR model, at 10:30 we will know the high or the low of the day. So if we entry here, it give a perfect entry at 10:32 right there. And also it's form a double top pattern right there. So this one is just a retracement. It not a reversal, yes. But when it come back here and see, it also retests this order block right here perfectly right there. You see right there, big upclose candle. You see that? And the next candle, boom, go down, go down, go down. And our initial target gonna be 8, open at 9 or 9:30. However, it didn't reach our target. So we have to adjust our target. Should be this one. Should be this bullish breaker, right? Or this bullish breaker, then it will hit our target right there. So that's our the trade that we are supposed to check, the second trade. We're not allowed to do that, but it's just, you know, for our learning and exercise purpose, that will be the trade if we want to check the trade, the short trade right there. So basically our trade idea is that we go short. Why? Because we analyze the pre-markets, we determine it's going to be bearish today. However, you see that it turned out it's not bearish, because you see it's open above, and it open and it stay above open 9 or 930 level right there. And also we have taken into the consideration of the smart money diversion. I think we did mention a little bit this morning. So that a signal gives us the idea that it's better to go long for today instead of try to short today. And right, so we learned a lesson. We took one trade and we lost 7 cents. So here's our the summary for the trade we check. So basically the setup we set with the trade is the blocker, fair value gap retest short setup. And the lesson we learned that, you know, we have to pay attention to the bullish signal, right? So we better go long, not go short. So our initial analysis, it turned out to be incorrect, right? So let's look again what we are seeing right from the diversion. Just review. Look at the yeah, right here. So basically at 9:30 the SPY make a higher low. Basically if it failed to make a lower low, the QQ make a lower low. That means we need to go long on the SPY right there. That's clearly, you know, bullish signal. So we should reconsider our, you know, bearish sentiment right there, or bias right there. But anyway, we learn from our our mistakes, or our basically we learn from our mistakes. So next time if we engage a short, we need to look at the smart market diversion to give us another, you know, area of confluence right here. One thing I want to point out real quick, that look at the 15-minute time frame. We can see a little bit, you know, much clearer picture why we should go long. You see at 8:30 you see a so-called bullish breaker right there, or you can say it's auto block the other way. But however, you see right here it failed to make a lower low. It already take out the low of the previous day. So we should engage in a long setup right there, because it take the buy sell side degree of previous day, right? So that we need to engage long right there. instead of we try to engage, we try to short it. Look at the 15-minute time frame, we can see that right here it make a new low, right, 7 o'clock, and at 9 o'clock, 9:30, oh, it felt to make a lower low, right, make a high low right there, and liquidity from the previous day, low previous day, it was taken, right. So basically the sell-side liquidity were taken. So one of our rule of engagement is that we will check the trade when the buy side or sell side liquidity were taken. Here's our rule of engagement right here. Buy side or sell side was taken, or in other words, liquidity, sweep or rate. Then we see the fair value gap and we see the diversion. Then we check the trade. So for the trade this morning, we short them. We go again our ruling arrangement right here, right? For the sell side liquidity were taken, we're supposed to take a long position, but we take a short position. So that's violation that the first violation that we make right there, or the first mistake we make right there. So a lot of lesson in the works right there. And also we don't check a clock at the smart volume version. We failed to do that, or we forgot to do that, or we rushed to take a trade instead of take our condition right there. And also this morning we failed to draw the new week opening gap, so that a level that we need to pay attention right there. Okay, so go back here at the 5-minute time frame. You can see right at 8:30 is a bullish breaker, you see, and then is break through this breaker with a fair value gap create at 9:55. Is the time of interest for us, for our model right there, right? Any time frame that 10 minutes behind the hour, after the hour, or before the hour is our time of interest right there, because we trading based ICC concept is based on time and price, so the time should be critical to our model also, right? So you see that the fair value create right here. So this fair value gap is overlapped with a bullish near breaker. So in the ETC model, I think he calls a unicorn setup right there. So right there, after sell side liquidity was taken, a bullish breaker created and the fair value gap overlapped that, and then when it retests that's bullish breaker and break through the fair value gap, then you can entry right there. It's a very high setup, so we can entry at 10:50, right? It is our general time of entry right there, also 10:50. Or you can enter right here at 10:40, a little bit too early, but you can enter at 10:50 or 10:55, right? Perfect entry for right here. That's the first entry, and they also give a second entry right here. A little bit scary to take a second entry right here. The same way when you try to short right here, right? Short right here, right? The second entry for any second right short. You remember on 1 minute time frame, we see the double top right here. Is how it look in the 5 minute time frame right here. So that means that you can see that this is a unicorn setup right there, and it retest twice for us. So if you entry from here, it's a higher property setup for, and we can target at a high time frame target right there, exportable right here. That's, or buy sell liquidity, we can target right here also, 1430 right there. That's our target here. So right here, right, we want to take buy sell liquidity, will be this one, 1430 over that, and 1430. Let's make it lower, it's easy to see our target, or right here, 55. I think 55 is also a good exit time for us, right? Because it's 10 minutes before and after an hour. That's 55. And it confluent with the level of the high time frame PDRA. That's the HST technology, terminology, which is basically a high time frame point of entry right there. In this case, it's a order block. H4 stands for 4-hour time frame. Order block is a bullet order block. So again, if we look at the 5-minute time frame, we can see this is a bullish, because you see that it above the opening, 9:30 open at 9:30, it stay above. You see, it not even it touches it. You see, is breakthrough right away. At 9:30, it pull back just a little bit, but then it's from 9:35 is below there, but boom, at 9:40 is it moving away from open at 9:30. At retest, it not even touches at 10:40. Rejection, reject 45, and it test again here, right there, but it never reached level. So that is a very strong bullish signal right there. So we can see the setup right here, right? The unicorn setup for entry. You can do first entry, second entry right here. Another increase setup that we can see that within this setup, you can see another setup right here, which is, you can see here is order block, right? Oh yeah, I put right here is order block. It's also order block, right? And this order block have a fair value gap right there. So you can trick this also at a setup called order block, fair value gap retest, and this is so-called bullet breaker, fair value gap retest. So it's the overlap of two setup right there. So that's a new discovery for today. For today we did discover this so-called overlap setup right there. Let's annotate this and take note of this, so next time when we see this setup, we will not be fearful. We will not fear to check the entry right here. That will build our confidence right there, because we experienced that before, so we know it will work, right? So trading is pretty much come from experience. So let's take a screenshot of this. We have two setups that overlap. Beautiful right there. Okay, let's go with the first setup right here. hold on, let's see, right? This is our first, is our, I think that let U55 much better right here. I see 55 better. That's the entry for the unicorn setup, which is basically a bullet breaker and the fair value gap retest, and the fair value gap is overlap with the bullet breaker, so it's a unicorn right there. That's the entry for this. And then this one is the order block. Yeah, order block. And our entry for this setup, it will be at this. Normally we want to long at the Dow close candle, but I believe that at that moment this will be Dow close, right? So at the Dow close candle, so right here, I think at that moment it will be a Dow close candle right there. So let's see 05. Let's do 05. Is there? I know, you know, in the real time, you're not gonna make a perfect entry. We're not gonna make perfect entry, but for our education purposes and analysis, you know, we are backtest the concept. So. Okay, let do log this trade or log this analysis. Take a screenshot of this, right? So what we are talking about right here. All right, we're talking about two setups that overlap. Okay, let's do one by one first. Okay. This one you can call breaker, fair value gap, retest, right? Or another name for this is the ICC call is a unicorn. Unicorn, right? And it is a long setup. And where is this? So our attention is going to this bullish breaker, and this is the fair value gap right here, and our entry is right here, and our target right here, right? Target at a buy side liquidity right here, buy side liquidity, or the high time frame level right here. So this is our target. And we know that this is also the of is a second entry, okay? Oh. Okay, another setup it overlap right here, which is right here, the order block, and this is our entry, right? This setup right here we call order block, fair value gap, retest, and it's a long setup, and the target gonna be the same target with this one. So this is very interesting. It's the new knowledge choice that we see two setup overlap. So it's a very high quality, high probability setup for it right there. Okay, let's take this screenshot. And put into our journal. Right, we put in our journal, let's say it's a breaker, fair value gap, retest, and order block, fair value gap, retest, overlap. It's on 5-minute time frame. Yep, I think we have 4 more minutes to wrap up our 30-minute end of day review. So what we could do better for today, right? We could do better for today if we look at the smart money diversion. So we will not try to go short. And today we did raise the possibility that Thursday can be a reversal, right? But for other reason, we take a short trade. Yeah, I remember we did talking about this on the 1 hour time frame, right? We say it's a double top, so it's gonna go down, and Thursday gonna be, continuation of it down, right? Going down. However, it's reversed right here. You go back up, right? That's our logic why we want to short them. And also we look at the 15-minute time frame. You remember let's look at the 15-minute time frame. Yeah, right here. When we do the pre-market analysis, we see right here, we say that it's a bearish breaker. So when it touches it bearish breaker, we're going to short them, and that's exactly what we did. What we did, right? We short them, but turn out that our bias is incorrect. We better go long. Yep. Yep. So basically, that's the idea. Well, that's the 20 minutes, end of day analysis for today. And we'll learn, a couple of things today. First, when we check the trade, we make sure that we manage our risk. We don't manage the outcome, and we want our risk to be small, and if our idea not working out, then it will be very fast for us. But if it's working out, then we let it run to our target. Alright, I think that's it for today, and talk to you guys tomorrow. Thank you. Bye.